It's Wednesday, the 30th of June 2021, the final day of the financial year. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. 12 million Australians are now in lockdown as confusion reigns over the rollout of the AstraZeneca vaccine. That's our main story. Also coming up in today's podcast, gold has its worst month in more than 4 years. Bank shareholders should get ready for a buyback and dividend bonanza. And big mining companies warned about keeping up good relations with traditional owners. Then, stay listening for my chat to Commonwealth Bank Chief Economist Stephen Halmarick about how the current COVID outbreak will hit the economy. But first, here's a brief look at markets. Wall Street was mixed overnight, notwithstanding some strong economic news. Consumer confidence soared in the world's biggest economy this month, while US home prices accelerated during April at their fastest pace in more than 3 decades. In early afternoon trading, the S&P 500 and Dow Jones Industrial Average were both up slightly, while the Nasdaq was 0.3% higher. One stock worth mentioning is Facebook. Its share price has risen consistently over the past 3 months, and this week it joined the $1 trillion club. It's the 5th US company to breach the mark in market capitalization terms, joining Apple, Microsoft, Amazon, and Alphabet, parent of Google. As a comparison, Facebook is now worth almost as much as the top 20 companies on the ASX combined. European markets were stronger overnight, with London's FTSE closing up 0.2% and the Stoxx Europe 600 finishing 0.3% better. The S&P ASX 200 closed down just 6 points yesterday to 7,301 points. There wasn't a lot of activity among the large caps. Toll Road Group Transurban finished down 1.7%, while Woodside Petroleum was off 1.1%. Sonic Healthcare was the best performing large cap, up 1.6%. The banks were generally higher, while the big miners were generally lower. Last day of the financial year today, keep that in mind. Oil prices were up a touch overnight. The price of gold was lower. The precious metal now looks like recording its biggest monthly drop in 4 years during June. Rising US stocks and a stronger greenback have contributed to the fall. The price of an ounce of gold is down 7% this month. The Aussie dollar is trading at 75.2 US cents, and Bitcoin's resurgence, against all odds, continued overnight, with the cryptocurrency up 5% to more than $36,000 US a unit. Queensland is the latest state to introduce a mandatory lockdown, and there are now 12 million Australians staying at home, after 23 new community-transmitted cases of COVID-19 were announced across the country yesterday. New South Wales, Queensland, Western Australia and Northern Territory all now have lockdowns in place for their capital cities and some regions. The shutdowns came as state premiers and medical experts said they weren't advised of the federal government's decision to allow the AstraZeneca vaccine to be given to any adult, ahead of Prime Minister Scott Morrison's announcement on Monday night. It was not, as had been assumed, part of a national cabinet decision. The Australian Medical Association yesterday advised patients under the age of 60 to follow the advice of top immunisation experts and get the Pfizer vaccine instead of AstraZeneca. New South Wales remains the main hotspot for the Delta COVID-19 outbreak. The state announced 19 new community cases yesterday, of which 17 were linked. Only 7 people were isolated during their infectious period. The state now has 149 active cases of COVID-19. Victoria recorded 0 new cases, but the state closed its border to residents of Perth, southeast Queensland and Townsville. Western Australia recorded no new cases, but closed its border to Queensland. Northern Territory recorded 2 new cases, and Tasmania shut its borders to residents of Perth. Ironically, Victoria is now just about the safest place in the country. Queensland Premier Anastasia Palaszczuk apologised for introducing her state's lockdown in the middle of school holidays, but said it was necessary. Ms Palaszczuk, along with Victorian Premier Daniel Andrews, called for fewer international arrivals to release pressure on the quarantine system. Meanwhile, New South Wales announced financial support packages, including grants of between $5,000 and $10,000 to companies if revenue falls below certain thresholds. Payroll tax deferrals were also announced. But Premier Gladys Berejiklian said she was frustrated at the pace of vaccine rollouts. While there have been around 7.5 million jabs administered, less than 5% of the population is fully inoculated. The Australian newspaper is reporting this morning that health officials have approved a nationwide rollout of pharmacy vaccinations, which would accelerate inoculations. Clearly, there's plenty of confusion about the vaccine rollout and what individuals should do, and state premiers are trigger happy around lockdowns, and maybe they should be. Again, my advice to listeners, get vaccinated. Speak to your GP, find out the pros and cons of the different vaccines, and then get vaccinated. In a moment, the rest of the news you need to know this morning. In overseas news, a US judge has dismissed 2 antitrust lawsuits against Facebook, one from the Federal Trade Commission and another from a group of states, damaging efforts by regulators to rein in the tech giant. The judge said the federal agency hadn't shown that Facebook had monopoly power over the social networking market. The judgment was a big reason for the surge in Facebook's share price, which I mentioned earlier on. The former chair of the world's biggest pension fund believes there's signs of a bubble in environmental, social and governance investing, and funds needed to consider how much ESG assets contributed to returns. Ijai Hirano was chair of the board of governors of Japan's government pension fund until 2017, a period when the fund became a world leader in ESG investment. But yesterday, he said it was time for the fund to decide if ESG was profitable or not. And being a chief medical officer isn't always what it's cracked up to be. Long hours, media exposure, continually being a bearer of bad news. And now in England, police are investigating a video that shows the country's chief medical officer being harassed by 2 men in a park. Politicians from all sides have called it disgusting. Locally, if you're a bank shareholder, you can expect bigger dividends over the next 6 months, according to research house Morningstar. The group said the Big Four banks will return around $34 billion in excess capital to shareholders over the next 3 years, though it's not quite clear how they'll do it. Share buybacks are a possibility, so too bigger dividend payments. Morningstar said if the banks boosted their dividend payments to 100% of profits, they'd be trading on a dividend yield of up to 6%. Given a term deposit is paying less than 1%, that's a pretty attractive yield. It's a long way from 12 months ago when banks were cutting dividend payments. Collins Food, owner of KFC Australia, reported higher revenue and profit for the 2021 financial year, which ended on May 2. Same-store sales surged and total revenue at KFC outlets passed $1 billion for the first time. Basically, much more chicken was sold. The group will pay a higher dividend. Since then, sales have been a bit more muted, particularly in its Taco Bell stores. Investors are a fickle bunch and they didn't like the forward-looking statements, and Collins Foods' share price closed nearly 6% lower yesterday. Notwithstanding that drop, there's something going right at Collins Food, based on my family at least. A few years ago, none of my kids ate KFC. Today, they all do, and so do their friends. In fact, it's almost their preferred fast food option. Not sure the chicken tastes different, but something is much better at Collins Foods. Retailer Kathmandu said total sales would fall below expectations as a result of COVID-19 lockdowns in Australia. The group's 40 stores in New South Wales are closed for at least 2 weeks, and 26 in Western Australia won't open for at least 4 days. 62 stores were impacted during the 2-week lockdown in Victoria. The commentary came as confusion among New South Wales retailers grew over whether they can stay open. While there is a lockdown going on, and people are only able to leave home for essential reasons, stores are allowed to open. David Jones, Country Road, Spotlight, Optus and Officeworks are all open, while Myer is closed. Very confusing. Santos will start engineering and design work on its $2.6 billion Dorado project north of Port Hedland, with a final decision on the controversial expansion expected in the middle of next year. Santos has been criticised for investing in fossil fuel energy, and has also been looking for a third party to invest into the project by selling part of its 80% stake. If it goes ahead, the project is expected to produce up to 100,000 barrels of high-quality crude oil a day. Medibank will return more than $100 million to customers via lower premiums as part of its Give Back program post-pandemic. Around 2 million policies will be eligible, and it follows COVID-19 restrictions limiting how customers could use their health insurance. The group provided another $195 million in financial support during the pandemic. Moody's Investor Service said major resource companies could be downgraded if they don't maintain a good working relationship with traditional owners where they operate. The report from the ratings agency, released yesterday, said a miner's social licence to operate was increasingly important, and Moody's was watching relationships closely, even if the letter of the law was being followed. Several of the major property companies went ex-dividend yesterday. That's the cut-off point for shareholders receiving payouts. So if you buy a share in one of the companies today, you don't get the dividend that we paid in coming weeks. APN, GDI and Vicinity, among others, all went ex-div. It means share prices fell yesterday, reflecting the value of the dividend, or at least part of the value. The biggest superannuation fund in the country, Australian Super, wants to sell down its 16% stake in Ausgrid, which is New South Wales' biggest electricity distribution company. Aussie Super wants to use the money to invest offshore. The super fund, powered by its more than 2 million members, is a heavyweight in the local investment community. Its choices can make big differences to the share price or value of assets. There's another merger in the listed investment trust market, with Wilson Asset Management merging with Templeton Global Growth. Listed investment companies pool the money of investors and then buy into different asset classes. Templeton has been undertaking a strategic review since late last year. The group has consistently traded at a share price less than the combined value of its assets, and the deal with Wilson Asset Management will allow shareholders to get out, with that gap being closed. Templeton's share price was up 3.6% yesterday. The Wilson Asset Management Fund, after the merger, will be worth around $600 million and invest in international shares. And Adore Beauty, famous for sending a Tim Tam with each online order, is pushing its media credentials to attract customers. According to an interview in the Financial Review, Adore sees itself as part retailer, part media company. Content across social media channels can bring customers closer to the brand, and more importantly, closer to clicking the purchase button. Adore Beauty's podcast, Beauty IQ Uncensored, has been downloaded 2 million times, and its YouTube channel has 3 million views. Adore listed in October last year, but it's been a rough ride, with its share price more than halving to its low last month. Since then, it's bounced about 30%. Coming up next is the Fear and Greed Daily interview. Today, we're talking to Commonwealth Bank Chief Economist Stephen Halmarick. CBA is forecasting interest rates to increase at the end of next year, well ahead of the Reserve Bank's insistence that it won't move until 2024. We look at why the Commonwealth Bank is so sure of their prediction and what the latest COVID outbreak means for interest rates, credit card spending, and the economic recovery more broadly. That's up next in the Fear and Greed playlist. Find it on your podcast platform or at fearandgreed.com.au. It's Wednesday, the 30th of June, 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.